Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. There continues to be two patterns on this daily chart. One broken, repaired, but seemingly broken again, and one being tested yesterday and possibly today. The two patterns are, one, the recent main showrunner for this market since August last year. The dark blue December 24 to August 25 bullish Andrews pitchfork. In late May, prices dipped down below the dark blue lower time, currently 1179.5, and stayed close under it until the end of June, when prices shot back up again as a result from forming a small double bottom pattern, even Adam type. However, after the market peaked from that rise, we last week tested and punched down through the dark blue lower time before halting at the combination of the second pattern and the slowly rising long moving average, currently 1145.5. Now this long moving average was also instrumental along with the 61.8% absolute Fibonacci line at 1105 3/4 in holding the market up throughout June and the rise we saw in early July. So this leads me to the second pattern, and one that is still live but being tested. It is the early January to late June bright red bullish Andrews pitchfork. Up until yesterday, a main feature of this pattern was that none of the tines had been tested since its formation. This is no longer true, as yesterday prices tested but rejected so far the bright red lower tine, currently 1151.5. Looking at the top side now, we have the green short medium moving average, currently 1166.25, which doesn't seem to be much of a resistance, and the mauve medium moving average, currently 1176 3/4, which does, very much does, look like resistance right now, having capped the market late last week and early this week. Plus, we have all the congestion seen back in March and early April. Looking below, we have the congestion from June between 1110 to 1140, with that 61.8% absolute Fibonacci line below that, which I believe caused that congestion in the first place. Plus just below the 50% Fibonacci line of the May to August 24 move at 1098 even. Given Jew's actions, this looks like a significant support zone. Chicago soybean meal. Much as soybeans themselves, there are two main patterns here. One being tested and still valid, and one no longer seemingly valid, plus a third new possible pattern drawn this week. But this is where the similarity ends. You see, yes, we do have an early January to mid-June bright red bullish Andrews pitchfork, that's barely had the bright red lower tine tested at the start, and that's currently 308.70. But 2 weeks ago had the bright red middle tine above tested, currently at 332.10, though prices failed at stabilizing over it. And then late last week and this week, the market forged ahead lower through all the moving averages and the trendline extension in dark blue to yesterday test the bright red lower tine. But so far the market has been rejected by it. This is definitely one to watch. The second pattern here is a reverse head and shoulders pattern made over mid-May to mid-July, and a pretty ugly looking one as well, and one that has failed with prices moving away from the neckline, currently 321.30. The big roadblocks to achieve this pattern are the 61.8% absolute Fibonacci line at 336.30, this year's high at 338.70, and the next major high from October 24 at 351.60. Now, a new pattern has emerged with the rise and subsequent decline of the market in July. It's a bright green mid-May to late July bearish Andrews pitchfork. The market is right now in between the bright green middle tine below, currently at 305.40, and the bright green upper tine above, currently 329.40, but closer towards the bright green middle tine below. This pattern is a timely reminder of a piece, indeed a final point, which this commentary would not be complete without me mentioning, and that is something I've included in my commentaries now for 166 weeks, so well over into 3 years now. It's to do with the annual key reversal seen here at the end of 2023. I said back then, and I quote, "I now only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "There is only one thing you take away from it in my musings, let have been those words." End of quote. For 3 years, the shadow of that pattern has darkened the skyline of this market ever since. I wondered if prices were now finally sending that shadow to oblivion. Right now, well, it doesn't look so. So please don't hold your breath, as we are still, with all these moves, still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, even when it was being thoroughly tested. It is the bright pink March to August 2025 bullish Andrews pitchfork. The market today moving back below the bright pink middle time, currently at 69.63. Whilst all this was happening, a more recent pattern emerged. A dark blue start of February to late June bullish shift pitchfork. 2 weeks ago, prices pressed down through the dark blue lower time, currently at 69.26, lodged in amongst some congestion between the July 20-hour high at 67.14 and the July 23 high at 69.12. And they stayed below it, stabilizing below both the bright pink middle time and, perhaps more importantly, below the dark blue lower time. Prices have now tested down to the July 2008 high at 67.14, but have failed to establish themselves below it as yet. That will be the next objective on the downside, because if the market does manage to establish itself below there, then we really haven't got that much support under the congestion between July to August 2023, between 62.5 to 65. This is why we had a low last month at 65.59 and one in April at 65.35, as prices turned up away from testing this congestion below. To all this, I would like to introduce another new pattern which may or may not help. It is the start of June to mid-July bright green bearish Andrews pitchfork. Prices are in between the bright green middle time below, currently at 65.99, the bright green upper time above, currently at 72.93, though closer to the bright green middle time. This is the first bearish pattern I've introduced here in a long time, and it is one to watch, as it may require finessing to a shallower bearish shift pitchfork for the same move, which I would be happy to do in a heartbeat. This brings me to a point I've been making now for the past few months when I said, and I quote, "I think for this market, the question is not whether the market is bullish or not, but how bullish does this market choose to be?" End of quote. This is now the 11th week, and the bullish incentive for the first time is not only dampened, as I've been saying for a very recent week, but possibly may have an existential threat developing. So, caution. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.